Welcome to Witham Sounding Board, a podcast sharing powerful business tips, insights, and trends for those seeking to become a rock star in their industry.
Here today from Witham is Paul Helderman and Dan Mayo, two members of the firm's National Tax Services Group. Paul specializes in corporate taxation, and Dan is our federal tax policy lead. Today, they will talk to us about the recent changes the CARES Act made with respect to net operating losses. Let's start with Dan. Can you please explain what the CARES Act changed in regards to net operating losses?
Sure, I'd be glad to, Allison. There were three key changes that were made regarding net operating losses and one related change relating to alternative minimum tax or AMT credits. The first change regarding NOLs is that there is now a 5-year carryback for net operating losses that were generated in the years 2018 to 2020. Second, there's a 2-year carryback for NOLs that relate to tax years that began in 2017 and ended in 2018. Finally, the CARES Act eliminated the requirement for years 2018 to 2020 that NOLs can only offset 80% of a corporation's taxable income. In a related change, the CARES Act accelerated the time frame in which AMT credits can be recovered. Prior to the CARES Act, AMT credits were recovered from the years 2018 through 2021, with the balance recoverable in 2021. After the CARES Act, AMT credits can now be carried back to 2018 and recovered in that tax year.
Thanks, Dan. Now let me ask Paul, how does a corporation obtain this relief?
Sure, Allison. A corporate taxpayer has two options of obtaining a refund associated with the carryback of an NOL or the AMT credit carryback. One is the most quickest option is the Form 1139, and that's obviously referred to as a quickie refund. And this manner is it's tentative. It's not a final refund, but it's called a tentative refund because the IRS does not have to audit this refund, and they're required to submit it within or process it and submit the refund within 90 days. Previously, a taxpayer needed to file Form 1139 within 12 months of the corporation's tax year, which caused concern or uncertainty as far as the 2018 calendar year, since that date would have gone by. However, the IRS has extended that due date up for a calendar year taxpayer up through June 30, 2019. The other issue with 1139 was that it's required to be filed in paper. As a result of the pandemic, the IRS service centers are closed, so these paper filed returns were not being processed and sitting in trailers effectively. So the IRS, to expedite the filings, provided tentative procedures around faxing the form, which they instituted on April 17th. And the other option for claiming a refund is Form 1120X, which is an amended tax return. And this tax return must be filed within 3 years of the year in which the taxable loss occurred. The process for this is much longer. The actual instructions to the form indicate 3 to 4 months. Just like the 1139, prior to the tentative procedures being allowed for faxing, this form was required to be filed in paper, and the IRS didn't extend the faxing to the Form 1120X. Additionally, an 1120X can be subject to Joint Committee Taxation Review if a refund is in excess of $5 million, which is not the case for Form 1139.
Thank you for explaining the differences, Paul. Dan, is there anything else that clients should be thinking about?
Yes, a couple things. First, the tax rates in years prior to 2018, the maximum corporate tax rate was 35%. Starting in 2018, the maximum corporate tax rate is 21%. So if a taxpayer carries back these NOLs to years before 2018, they will receive a larger value for the NOLs, which could give rise to a permanent difference in benefit for tax accounting purposes. Next, When the taxpayer carries back its NOLs, it will also need to recalculate the amount of any AMT credits to which it is entitled, and that credit will be carried forward and then refunded in 2018, as explained earlier. Finally, there are other issues relating to international tax and state and local taxes that will arise when NOLs are carried back to a prior year. And also there may be short taxable years as a result of M&A transactions. These issues and other tax developments from the CARES Act will be addressed in future communications from Witham.
Thanks for joining us. Be sure to subscribe to our podcast so you'll be first in line to hear what's coming next. Don't want to wait for our next episode? Check us out at witham.com. That's WITHUM.com.